Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today's Tuesday, and it's June 11th. Hope you guys having a great morning so far. We do got a couple items on the economic calendar, so just jump right into it. The first item is the NFIB Small Business Index, which is the kind of index that measures the small business confidence level. And this is important primarily because small businesses do represent the majority of the jobs out there, or job creations out there. And in April, we had a 103.5, which is a still pretty good number for April. And it increased 1.5 points to 105 in May. So a good sign here, especially heading into the summer where we start seeing a little bit more of a spike in employment and jobs creations. Obviously, May wasn't a very good month, as we saw in last Friday's numbers, but overall, heading into summer, a lot of times we see improvement in jobs. But of course, we'll have to wait and see, how that translates. Producer price index. This is the inflation data out on the wholesale level. So this doesn't have a high weight in terms of importance, but we do kind of keep an eye on it. Primarily, the reason why it does not have a high weight is primarily because this is on the wholesale side level. So even though costs sometimes go up on wholesale, they don't always pass all those costs onto the consumer, and that's really what we kind of watch. So that's why we have a little bit more weight towards the PCE and the CPI data when we get those. However, in April we had a 0.2% increase, which brought it to year over year 2.2%. And then in May, it only went up 0.1%. So that went down to 1.8%. So year over year, we went from 2.2% down to 1.8%. So it declined as a result. So a pretty good chunk there, considering that it only went up 0.1%. But it's going on a 12-month rolling average there. And obviously, that's a good sign that inflation's still relatively low. And it gives it's good because the investors were kind of hoping for a rate cut, and one of the reasons why the Fed keeps the rates higher is to stave off inflation. Inflation, if it's low, they can cut those rates a little bit down without having a problem with costs getting out of control. So let's go jump ahead here to the headline news. Stock market is up. It's taking this cue mostly from this Chinese stimulus. There's an announcement out that on a global level there's a equity, so like Wall Street and all these other countries are getting together, I guess, are in the process of issuing bonds to help China. They want to stimulate their economy for all these local governments and creating more infrastructure rebuilding. So they're trying to rebuild some infrastructure in China, especially on these smaller government levels, and they're hoping that will help to stimulate their economy over there. This is one of the things that they're trying to do. So of course the market's kind of liking it, and so let's move on here. So bond market is doing. Bond market's doing okay. It's up 3 basis points. So no change from yesterday's pricing. We don't really see any mortgage rates have not been affected by this, and treasuries we're up from what we were yesterday. So right now we're at 2.15. Even though it did spike up a little bit higher on the day, but right now we're at 2.15 of the day so far. Okay, so that's pretty much a wrap. Mortgage rates are the same, unchanged from yesterday's pricing, and we'll see how it plays out for the rest of the day. But you guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.